But again, China is different. Now, to be fair, today it's a middle-income country, but even back in the early 2000s, its people were spending barely anything of barely anything. So the country's been bringing in a lot of money through massive exports, it hasn't been spending it, and the stock market has been more or less ignored by most regular investors. So then, where is all of this money going? Well, of course, there is at least one asset class that has up until recently been extremely popular, and that is real estate. And real estate is connected to the debt problem in a number of ways. Chinese real estate is the single largest asset class in the world. The country has taken its wealth from being the workshop of the world and invested it straight into real estate speculation. This has caused a lot of problems. We generally consider housing unaffordable in a city if the average home costs more than 5 times the average income. In Los Angeles, for example, it's about 7.5 times. Sydney is 13 times, and in London, the average home costs 19 times the average income. But in Beijing, that number is closer to 35 times. Their cities are now just as expensive as major global centres in the West, but average incomes are still much further behind. With an impressive savings rate and nowhere else to put their money, real estate has gone further than transitioning from a home to an asset class. It's now really the only asset class. With that, the country has also slowly built up a lot of household debt as well, mostly going to fund increasingly out-of-reach property purchases. Now, a real estate crisis by itself is one thing, and the potential for this literal house of cards to come tumbling down is very real in China, but this also caused another curious problem: deflation.